Can you hear me, guys? Wait, what are we talking about?
Any questions? Hello, everyone.
Hello.
Can you all
Hello.
hear me?
Yes, we can hear you.
How is everyone doing today?
Good. Doing well. How about yourself?
No complaints. Life is okay right now. Hopefully, hopefully someday things will be back to normal soon, whatever that means. Are all of you doing okay?
Yeah.
Okay. I'm assuming that you did do the extra credit exam that I have posted for you, and I hope you have attempted it. I went over it in the last class. So first thing I will do is I will take any questions that you have, any topic you want me to explain, since I have already completed the course. I will take any questions you have, anything you want me to explain again from any topic for the last 4 chapters or 3 chapters. So your turn first.
I had a question on a section in chapter 22, and
Chapter
it
22.
the ones where you compare the actual price to the standard price and that quantity. Some of those problems, there's like you do the actual and then you do the actual times the standard and then you do the standard times the standard, and you get like two monetary amounts at the bottom, and I don't know what those mean. Or like I know they're the variances, but I don't know how to determine if they're favorable or not.
Okay, so you are on the basically direct material price, direct material variance and direct labor variances. Okay, we will do a couple of questions on that, and then hopefully that would clarify it. Do you remember the formulas?
Yeah, it's like AP times AQ and then AP times SQ and then SQ times SP.
So what are those actually? So if you think about it, what are
It's like the actual price you paid with the actual quantity.
so first is your actual quantity times actual price, which is basically the actual cost you have paid, right?
Yeah.
And then you've got the standard quantity times standard price, which is basically your master budget. Okay.
Yeah.
In between is the flexible budget. So this is the actual, this is the standard. So when we find the actual at standard,
If you're showing something on the screen, we can't see it.
okay, sorry, thank you. Can you see it now?
Yes.
Okay, so the first part is the actual, and this is the third part is your standard. The in between is your standard for the actual quantity. Okay, so let me go back to the which chapter number was it? 21?
I believe it was 22, but I could be wrong.
It's not in 22. It's not in 22. Okay, do you see the slide now?
Yes.
Okay. So the first one is gives you your actual quantity times actual price. So this represents the actual cost. The last one, as I said, represents standard quantity at the standard price. Okay.
Yep.
And this is your actual quantity at the standard price. This one is the flexible one. Now, what that basically means is, given our actual level of activity at the standard price, what would it have cost? What it should have costed you? That's what it means. So the first one is the difference between these 1 and 2, and the second one is the difference between 2 and 3. So if you take actual price minus standard price times the actual quantity purchased, this is actual quantity purchased, that will give you the material price variance. Now, if your actual price paid is more than the standard price, this is going to be an unfavorable variance. Second one, sec2 minus 3, that is actual quantity minus standard quantity allowed for the actual output. Standard quantity allowed for the actual output. That means what should have been the standard quantity used if your actual output is a certain number times the standard price. So if your actual quantity used up is more than the standard quantity which is allowed for that, you've got an unfavorable variance. Now, are you clear until here, please?
Yeah, that was actually what I was stuck on, was how to determine if it was favorable or not.
So now I'll give you one or two examples of standard. So the only thing which is basically difficult, or not really difficult, but so here is an example. You got direct materials, half a pound per unit. So our standard is half a pound per unit for direct material. And at $20 per pound, it should cost us about $10 in direct material. That's your standard. In terms of labor, it takes 1 hour per unit. That's the standard. So that the standard allowed is 1 hour. Now, in this case, direct material is half a pound per unit. So if you were to produce 200 units, how many pounds of material are you actually allowed?
100.
100. So 200 times 0.5, right?
Right.
So that is the part of standard quantity allowed for the actual output, which might be different than the actual quantity that you have used. Do you understand the difference between the two, please?
Yeah.
Okay. Similarly, if we are allowing 1 hour of direct labor as a standard per unit, then if you produce 250 units, how many labor hours were you allowed?
250.
250 hours, right? But your actual hours, so you are allowed 250 hours, but suppose you used up 270 hours. Is your variance going to be favorable or unfavorable?
It'll be unfavorable.
Unfavorable, very good, because you used up more than what you were allowed, right?
Right.
So do you understand the difference? I mean, do you understand when it is favorable, unfavorable, and so on?
Yep, I got you.
Okay. So next is we compute the material price and the quantity variance. Now it says it's produced actually 3,500 club heads and it used 1,800 pounds of material. So how much material was allowed for every unit? How much material was allowed per unit?
1750 per unit, 0.5.
0.5, right? So for 3,500 units, 1750, right?
Right.
Okay, so that's the standard quantity allowed. So you were allowed 1750, you used up 1,800 pounds of material. Was this variance favorable or unfavorable?
Unfavorable.
Unfavorable, right? Because you use 50 pounds more,
Okay.
right?
Yep.
And you paid $21 actually per pound for the material. You were allowed $20 per pound. So this price variance will be favorable or unfavorable?
Unfavorable.
Why? Because
You paid $1 extra per pound than what's standard.
exactly. Okay. So since you understand that part of the information. So if you put it down, you got 21 minus 20, right? So $1 unfavorable for 1,800 pounds of material purchased and used. Got it?
Yeah.
Similarly, over here, you actually used up 1,800 pounds, but you're allowed only 1,750. That's what you told me.
So to summarize, if you use more, like in terms of quantity, and then you like pay more in terms of price, that's what makes it unfavorable.
Yes.
Okay.
Yes. Means you paid $21 instead of $20. So you are unfavorable. Why? You paid $1 more for 1,800 pounds. That's why it is 1,800 unfavorable variance.
Okay, I understand now. Thank you.
And same thing for the labor, basically. Instead of quantity, it will say hours, and instead of price, it would say rate. So the total of these two together is 2,800. Total direct material variance unfavorable. So you need to distinguish between the terms. Price variance is just 1 minus 2. Quantity variance is 2 minus 3. Total material variance is 1, both of them together. Oh, any questions from anyone else, please, on this? Now, as far as the labor variance is concerned, again, very same thing as we did in the material variance. Instead of actual price minus standard price, it is called the rate, actual rate minus standard rate. Instead of quantity, it is hours. Same thing here, actual hours minus standard hours allowed for the actual output times the standard rate. This is called the efficiency variance. Any question on these two formulas, please? So in this case, if you pay more than what you had budgeted for, it will be unfavorable. If you use more than what you were allowed, number of hours you were allowed, it will be unfavorable, and vice versa. So we produced 3,500 clubs. You used up actually working 3,400 hours. So for producing 3,500 clubs, you were allowed how many hours?
3,500.
So you are allowed 3,500 hours, you used up 3,400 hours. So would this variance be favorable or unfavorable efficiency variance?
Favorable.
Favorable. Why? Because you used less. You used 100 hours less than what you were allowed.
What?
Same thing here. Your per unit standard for labor hour was 16. you paid 1650. This would be favorable or unfavorable rate variance?
Unfavorable.
Unfavorable because you paid 50 cents more for those 3,400 hours. So right from here, you can get the answer. 50 cents times 3,400 will give you your 1,700 as the number. Do you see what I'm saying?
Yes.
Okay. So same thing we have done here. So 1650 times 60 times 3,400 hours will give you 1,700 unfavorable. And this one is favorable because you used up 100 less hours at $16 per labor hour for 1,600. If you add it together, that will give you the total labor cost variance of $100 unfavorable. Okay, does that answer your question, please?
Yes. Thank you.
Someone is asking where can we find the PowerPoints? I sent all those links right at the beginning of the class. I sent an email and which has all the links. Also, you can, it's and it might be also available on D2L, I think, if you have not seen it. Please check. Is the link available on D2L or not? I thought I sent you the links and everything.
Yeah, it's available on D2L.
So that answers your question. It's available on D2L.
It's
Okay.
under the tab that says McGraw-Hill something in PPT.
Yeah, so McGraw-Hill PowerPoint. So it's available over there for the student to ask the question
Thank
in the
you.
chat. Okay. So, who had asked this question on the variances, please?
I did.
Okay, Hunter, are you okay with it now?
Yeah, I understand now. Thank you.
Okay. Next, please.
I had a question on like it was on chapter 23. It's like the variable cost per unit, markup percentage, and selling price. Like I was able to get the variable cost per unit and selling price, but I was having a hard time getting the markup percentage.
Any particular question? Is the variable cost method you meant? Is this what you were asking for?
Yes.
This one markup percentage one.
Yes.
Okay. So target costing can be used when competition is high. Suppose the market price is $80. So we know that that's the price that is given by the market, and it wants to have a profit of $14 per unit. That basically means it needs to have the total cost under 66. That is 80 minus 14. It wants a 14% return on the invested assets of $1 million. So the target profit would be 140,000. So the market percentage is basically 14 over 80, which is 17.5%. Is that what we are talking about or something else?
Yeah, that was what I was talking about.
Okay, so we know that the profit is 14 and it represents basically 17.5% of 80. So your profit markup is 17.5%. So if you look at the markup percentage, using the variable cost method, you've got whatever your target profit is, 140,000, plus your fixed cost, fixed overhead, fixed selling and administrating overhead. You need or were you talking about the variable cost method?
Yes, I was. Can we go over like a question?
Sure. Okay. So in this case, you've got they sell snowboard, $112 for direct material, labor 42, variable overhead 57, fixed overhead 659, selling administrative 125. So the costs are given to you, and it expects to sell 11,200 snowboards. Now, if it uses a 10% markup on the total cost, so they can tell you the markup is on the variable cost or the total cost, or they might give you the target price. So then in that case, you have to reduce the total cost and then come up with the markup. So your total cost, if you're going to produce 11,200 snowboards and you've got $112 per unit of direct material, That means 112,000 times 11,200 is your direct material. Is this okay with everyone? Is this material cost okay with everyone, please?
Yeah.
Same thing with direct labor, $42 per unit for 11,200 units at 470,400, and same thing for the variable overhead. Are these three clear to everyone?
Yes.
Then you add your fixed overheads. These two are your fixed overheads that is given to you. So your total cost is 3,147,200. So on the total cost, you expect a margin of 10%. So per unit it is coming to 281. If you divide this 3,147 by 11,200 units, the per unit total cost is 281. The 10% of that is $28.10. So the selling price should be $309.10. Alternatively, you can just do 281 times 1.10, where you just add the 10%. Okay. Was that what you're asking or no?
Yeah, that sums up like selling price, but I'm still confused on um the markup percentage, I believe.
It will tell you on what it gives you the markup. Is this is on total cost. So you find the total cost, you're given the total 10% on that. If it would have told you on the selling price, the markup would be $30.91. Maybe let's try this. Maybe this will answer your question. Jose wants to start that makes snowboards. Similar snowboard is $330. So it tells you $330 is the selling price. They say that they can produce the total at a total cost of 280 per unit, and they plan a 20% markup on the total cost. So 20% markup on the total cost is 280 times 1.20 at 336. Okay, I think I know what you're saying. Okay. So if your markup is on the cost, that basically means your selling price is missing, right? In that case, your markup is 280 times 1.2, right?
Yes.
Now, it is also possible that they haven't given you the cost. So, but in that case, they will give you the selling price. So cost may not be given times 1.2. So in that case, your cost is equal to 336 divided by 1.2 at 280. So it could be either way, whether the markup is on the profit or on the cost. If you would be given two pieces and one could be a missing variable. Do you see what I'm saying?
Yeah.
Yeah, it is just the math part of it. Can Jose compete with this planned selling price? Most likely no, because that's the target price that's given to you. I'm trying to, if you have got any particular question in mind, you can ask me, I can answer that.
Well,
Was it in the exam? Where was the question you were looking for?
yeah, it was in the practice exam. It was question 35.
Okay, let's just go to that then. Because then it will be simpler to just explain that. Is this the one?
Yes.
Okay, so let's go over this and then hopefully that will answer your question. Okay.
Yep.
Okay, let's try it. And stop me again wherever you are having any difficulty in my explanation. So first is compute the variable cost per unit. So that's given to you right over here. Variable costs are given to you, right? Any questions over here? Means you just added those numbers,
Yeah, no, I got that fine.
right? Now, if the variable cost is 170, second is it tells you compute the percentage markup on the variable cost. So whatever the markup is, you're computing it based upon the variable cost. So variable cost is the basis on which you are computing. So in the previous question, you did it based upon the selling price, total cost, right? In this case, it is just asking you as a percentage of the variable cost, which is basically $170. As a percentage of 170, what is the markup percentage? So it tells you these are your overheads and the company wants a target profit of 305,000. So, and it is selling 25,000 units. So as far as the question is concerned, you've got $107 in the variable cost, $170 in the variable cost that you already know, right? That's for 1 unit. So for 25,000 units, that's the variable cost. Are you good with that?
Yes.
Now, as far as your fixed costs are concerned, you've got 675, 310, and 290, right? About this, right? Plus you've got a profit of 305,000. So that's the total thing you want. So those are the three numbers that you added. So market percentage for the overhead cost in relation to your variable cost. So variable cost is the basis. So you're just finding an overhead rate where variable cost is the basis. So it says compute the markup percentage on the variable cost. So you added these three numbers, you added your profit, that gives you your, and as a base, as a portion of your variable cost, that stands at around 37% of your variable cost. So what it is giving you is an overhead charge of 37% on your variable cost. That's all it is doing. The basis is the variable cost. If you remember, when you did the problems earlier, when you allocated the overhead, remember when you allocated the overhead as a percentage? You know how to allocate overhead, right?
Yes.
So if I tell you that overhead is 30% of your direct material cost, for example. So if your direct material is 200,000, so your overhead will be how much? Right?
Yes.
So in this case, your overhead charge is 37% of your variable cost. Your variable cost is 425, and 37% of that, I think 37% or something, 37.18% will be 1580. Do you see that? That 37% of this will give you the same number as this.
Yes.
That's all it is. So it's just an overhead charge based upon the variable cost. It could have told you as a as a as a as a percentage of your costs, overheads are charged at the rate of 50% of your material cost, for example. Okay. And this is what we showed here. This is the basis. This is the target profit. So you're adding your overhead and the profit as a percentage of your variable cost.
Okay, I understand it now.
So $50 is your variable cost, and 68% of that variable cost is being added as an overhead charge, plus the profit margin, making the selling price at 84. And I think I also gave you an example when we were in the classroom. Like, for example, when you go to get your car repaired, they not only charge whatever they charge, suppose they are charging a certain percentage as your labor cost, they also add a certain percentage of the labor cost as the overhead cost, because they have to meet the overhead cost also. Means they might be paying their labor $35. They might add 100% charge, or say 80% charge on the overheads, for on the labor cost. So they might tell you that your per hour, whatever is being used, it will cost you $63 per hour. Generally, all these service firms basically do it like this. When you go to a CPA, they don't tell you that our labor charge is this. They bill you, they just give you one charge. Our person at partner level is being charged $500 per hour. Uh, the assistant is being charged at the rate of $250 per hour. That is basically after taking into account their labor costs, whatever they pay directly, plus a person plus their profit and their other overheads that they incur. Okay,
Yep.
does that answer your question, please?
Yes, it does.
Uh, Someone had asked me the same question. Is
I think that was just me in the chat.
Prescott, right?
Yes.
Okay, so you asked me the same question in the chat. That's basically what the answer is. Okay, any other question on this, please? Okay, so this is being taken care of. Any other questions, please? Any question, any topic? Okay. Now, your final exam, you had chosen basically it's kind of a 70-30 split. The best I could do was like I had 50 points for the short problems and 100 points for your multiple choice. You got total of 25 25 problems for the final exam. 5 of them are short problems accounting for 50 points, and 20 of them are for 5 points each for 100 points total, making it 150 total points. You will have 2 hours to do it. So you got more, generally you got more than uh, 1 hour, 20 minutes for the final. And I've even provided you 125 minutes, 5 minutes extra than that total time that is there. Your exam will start at 10:15, I believe. I think 10:15 to 12:15. So I'll probably open it up about 5 minutes early or 10 minutes early. And then you can start it and finish it and then leave. That's basically what it's going to be. Okay.
Do we have to log in for that one?
Rules are same. You will log in through the Zoom and then do your exam on Connect as you have done in the first 2 exams. Yes. You will keep your cameras on, not these black boxes. What day is the exam? It is as per the university schedule formed by my record on May 6th. Okay. So today is 27th. We probably have one more. I don't think we have any more class because 4th the exam starts. So we have got the last class on 29th. Do you want to meet on that day or are we done? Say something so that I can decide.
I think I'm good personally. I don't know about the rest of the class.
Yeah, I am as well.
I'm good too. I mean, if I have any questions, I'll probably just email you.
Okay. Any other thoughts? Because, okay, let me say it this way. Let me put it this way. If I get 5 or more emails asking me to take the class on 29th, I will have the class on 29th. Okay. Otherwise, I wish you the best for your exam, and please do the extra credit practice exam as well as any other extra credit points. As far as the grading is concerned, as soon as you finish your final exam, you will know your score on the final exam. You will know your grades before I know. You will add all the extra credit points. If you reach 700 or more points, including the extra credit points, you have got a C. If you reach 800 plus points, you have got a B, and 900 plus points, you have got A. Uh, uh, I'll only use your highest attempt from anywhere. Now, if you see that you have not submitted something, let me know. Or if you have got delayed and I don't know, some of you I saw were go into work in progress, make sure everything that you have attempted has been submitted and graded. So go over each of your assignments, make sure nothing is pending or nothing for which you should have got a grade is missing. So that's your part. You need to take care of that part. I told this to you earlier also. And you also have an Excel grade sheet or Excel grade tracker. You can put your grades over there and you can find out instantly where you will end up. If you are getting a D in the classroom, in the class, you make sure use the pass fail option. Pass fail option does not work for an F. Accounting 202 requires a C or pass grade for moving on for the accounting majors. D is not acceptable for accounting 202 for accounting majors. With the D for 2 classes, you can have C or D, you can have D and above grade, you can use pass fail options for 2 of the classes. You would have got the instructions from the registrar's office. It has nothing to do with me. It's between basically you. If you decide you want to use the pass fail option, you use the pass fail option. The chair would approve it or disapprove it, and then the registrar will record it. It does not come to me. Any other questions, thoughts? Okay, if not, I thank you very much for being in the class, and hopefully you learned something new. And that's my only objective, that hopefully you learned some new techniques, new theory, and you will be able to use it in your workplace. Things like budgeting, variance analysis, I'm pretty sure everyone, whether you are an accounting major or not, you will use it. Similarly, relevant costs, that is the chapter 23 decision making, you'll be using it whether you are in any business. Same thing with the cost volume or the break-even analysis. You'll be using that irrespective of which field you are in. You can be in marketing, management, you can open your own business, etc., etc. You'll be using some of these topics irrespective of your major or your line of work. Elimination of cost value, elimination of non-value added activities. You'll use it anywhere you go. Or identification of value added activities and keeping them, you'll be using it. Irrespective of your field. So some of those topics are basically for the business. You need to understand those. Okay, since there are no questions, I am going to end the class now, and I wish you the best. I'll see you on May 6th for your final exam. In case you have any special requirements, please get in touch with me earlier, or make sure that I know it and I have made arrangements for it. So take care of yourself, everyone. Bye. Thank you very
you.
much.
Thank you. You too.
Thank you.
Thank you.
Thank you.